prices, there are more than just for sale signs hanging on the real estate market. There are good signs coming from it. Here to fill us in on what is happening is Mr. Cut to the Chase, Watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning. How are you?
Okay, I'm great. Well, let's talk about this, specifically the fact that mortgage applications, they jumped last week, and interest rates really low. So what does this mean for people that have their house on the market or for people that want to refinance?
Well, you're going to continue to see, whenever you see the mortgage rates come back down, obviously you're going to see a pickup again. People say, okay, that's the trigger. I'm going to go ahead and get that. They always kind of wait. Also, because of refinancing as well, hopefully we're going to start to see more of a stabilization in the real estate market around the country. Some of the markets that got hurt first are slowly but surely stabilizing, but we still have a while to go.
Okay, so people that are interested in putting their home on the market, this doesn't mean run out right now and do this.
If you need to put your house on the market, you're putting your house on the market maybe because you have to move, because of a job, whatever it may be. You have to be doing it for the right reasons. If you're, once again, trying to look at it, my house, I paid X for my house 3 years ago and I want to get it out today, might not be a good idea. It's a different reality.
Okay, well,
Chris, the point
about
so the tax credit that we found out too is that it's first-time home buyer, but that's not to be taken literally. It means that you haven't bought a house within 3 years.
Yes,
actually.
yep. Yes.
So you could have owned a house 10 years ago, sold it. As long as you've been renting in the last 3 years, you can buy again, and you're a virgin again. I guess
Absolutely.
Is what it's saying.
But once again, there's nothing wrong with renting. Renting is fine.
The legacies of the recession will be damaged credit scores and lenders' shady practices. Back for another round to help break it all down is Watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning.
Okay, so lenders are slashing credit lines. Sometimes they're closing accounts. What I find unbelievable, and what a lot of people may not know, is that even people with perfect credit can be affected by this.
Absolutely. Well, one of the things is we're seeing going on right now is just constant talk about new financial regulations, banking requirements, the amount of capital that a bank has to actually keep on its books in order to give out loans. Now, when a bank says, okay, Holly, I'm going to give you a $50,000 credit line, whatever it may be, and let's just say you have it as a backup and you never use it, that still remains on its book as outstanding loan that they've given out, and they have to keep capital on hand because of that. If you don't use it, they're saying, well, you know what, maybe we'll just take that back and give it to somebody else that will, and that happens a lot.
And so a lot of people might be surprised because there's some people out there with 5, 10 credit cards. Maybe they use 3 of them, and all of a sudden some of these credit cards are being
saying, forget it, we'll take it back. I mean, I'm a big believer. I use credit cards for everything that I do because it keeps track of everything and whatnot. Just make sure that you pay them off in full every single month, and you'll be fine.
Okay, let's talk about modifying your mortgage. A lot of people doing this right now. It's attractive to a lot of people, but it's hurting people. And just because you modify your mortgage doesn't mean you can't afford to pay. You just might want a lower payment.
Well, that's the whole goal. I mean, you want to consider your home, and I try to teach this to people in regards to financial planning. Your home's a bill. You need a place to live. You need food to eat. You need to have gas. You have a car. All these things. You want to be, if you're going to be modifying your loan, you want to have a lower payment, and you also don't want to be going out any extra equity. You want to keep building up the equity in the home.
Okay, real quickly, almost out of time, but how can people protect themselves from these lenders and these practices that are happening right now during this recession?
Just knowledge. Knowledge is the key. Pay as much attention as you possibly can. Get some help from an independent source. Beware of some of these just mortgage-type people out there. Go directly to
Secretary Timothy Geithner was back on Capitol Hill yesterday, urging Congress to get busy passing financial regulatory reform to prevent another banking disaster. Here to cut through the political clutter and give it to you straight is the Watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning.
All right, so let's start with this because, for a lot of people, this is confusing stuff, this financial regulation stuff.
Yeah.
And we get emotional when we hear about the taxpayer bailed out banks getting these legendary paydays and so forth. And that's one of the things they're going to try to crack down on. But isn't that just like a little drop in a bucket that's much larger and sort of misses the larger point?
Yeah, I could talk for this an hour. This has kind of been my modus operandi since I've started my career, doing what I'm doing, going after these big firms. Whatever scam it may be, whether it be manipulating .coms or be manipulating oil markets, whatever it may be, they tend to stem from downtown New York one way or another. The government has tried repeatedly, oh, we're going to regulate this, we're going to put more regulation. Wake of Enron, oh, let's Sarbanes-Oxley, we'll clean the whole thing up. They've done nothing. They've done nothing. The reality of the situation is all these financial institutions have gotten too big. Too big to fail. Systemic risk last year. Okay, here's government bailout.
Right.
So it doesn't make any difference whether it be Democrats and Republicans. They both derive most of their campaign dollars from Wall Street.
Right.
So nothing is really going to change.
And the problem, yeah, you've talked about this before, it's this supermarket. And I mean, again, folks that don't really know much about the financial world, this makes sense to them, the concept of conflict of interest. And when you have these banks that control too many facets of the financial world, all under one umbrella, it makes sense that there's going to things that go wrong.
I own a CFP firm, and we're fiduciaries to our clients. We have to put our clients' interests above our own. There's not a single Wall Street investment bank that can say that or do that, because they can't. They're conflicted. They're unable to do that. You wouldn't want to go to a doctor who is owned by the Pfizer Corporation, who ought to push just Pfizer drugs on you. We need to break up these financial institutions. This is going back to the 1990s. They repealed Glass-Steagall. They allowed all these banks to be involved in all these different things. We have antitrust legislation on the books. We use it. We'll be okay.
The little guy could help us a lot in this situation.